Hello everyone, welcome to this week's edition of the Fibonacci Review. Today I'm looking at Origin Energy. This is a typical stock in the Australian Stock Exchange and it's a weekly chart. So we're looking at a longer term perspective of a market and we're going to look at the Fibonacci series in time and in price, because either one of these fabulous phenomena can occur at any time and open up fabulous opportunities for educated traders. One of the things I love to do, and I do this frequently, is look at turning points on a chart, whether it's this low or this top or this low, and I try and figure out what tool, what signal, what indicator would have told me that that's very likely to be a turning point. And then obviously I'm waiting for price confirmation to confirm that. But let's have a look, because you can see there was a major low here September 30 and a significant top which just curled around October 20, and then we had a pullback. So what I'm going to do is just come in through here, use the Fibonacci retracement tool, the last major low to the next major top. I've got the Fibonacci retracement levels, and if I just drag that across to the right hand side, you can see we were within a couple of cents of the 38.2% Fibonacci retracement. Now typically if a market does that and it proves to be quite strong, then what you can find is that it will quite often repeat that particular run. Now that's not guaranteed, and it will and can do anything it wants to do, but what we can do on this particular occasion is we can now just grab this tool and we can put it onto the low, and we can see that it's reacted to the 50%, it's reacted to the 23.6, so it is showing a little bit of form there, and it just means that if this stock gets to around the $12 mark and I was holding it long, I'd be looking at it very, very carefully for any signals of weakness or reversal in the trend, either on the weekly chart or the monthly chart. So that's one of the little tricks you can do with this Fibonacci tool. What we saw was the low to the high there. So we're looking at price movement here. But what I also noticed, and this is very interesting, this is the COVID panic peak, December 2019. If I take a time price measure tool from there and I bring it down to this low, the starting point for the next major rally, it's 145 weeks from top to low. Now 144 is a very significant number. It's one of the favorite numbers that Gann used to love, and he had and was looking for that number all the time in his charts. But you'll also notice the price difference between the top and the bottom is 376, and of course the Fibonacci number is 377. So what we have here is time and price, Fibonacci series at a low, then the market turns around and reverses and starts to run up. So that would give me some confidence to say that could be a significant low. Then what I'll do is watch it for a couple of days and just see where traders take it. But you've got very early warning here about a potential change, and you've got very early warning here of a potential change, and both of those changes turned out to be terrific money earners for educated traders. So I hope that makes sense. And of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.